Welcome to the REI Diamond Interview, your source for real estate investment jewels of wisdom with Dan Breslin.
Welcome to the REI Diamond Show with Abhi Golhar on new construction, market trends, and attracting deal flow. I'm Dan Breslin, host of the REI Diamond Show. On this episode, I've invited Abhi Golhar of the Real Estate Deal Talk radio show in Atlanta to talk about his experience ranging from a 92-unit development deal to analyzing market trends through a very specific method of pulling comps. Abhi, like myself, is the type of guy that shares his value without any hype or sales pitch. So, as usual, you can expect another episode packed with real money-making information. I hope you enjoy this episode. Welcome to the show, Abhi. It's good to have you here finally.
Hey, thanks for having me, Dan. I appreciate it.
Absolutely. So you came highly recommended by some of the previous guests we had on the show, and I've been excited to get you on the show. So you operate or live primarily in and around the Atlanta, Georgia market, correct?
I am right in the heart of Atlanta. You got it. It's a fun time to be in Atlanta, let me tell you.
Sweet. I am also excited. We are in the process of opening some things up. I have a partner who lives in Atlanta as well, so we're kind of babes in the woods down there. We don't really, know the market. We don't have a ton of stuff going on, but I'm excited to add that to my list of cities where I will be frequenting on a regular basis to run deals. So, Abhi, let's start off with kind of how you got into the business and how you got to this point today and what your business primarily looks like, currently in the last 12 to 18 months.
Wow, a lot of questions. I could probably talk all day about them. So, I got started back in 2002, and I was a student at the University of Michigan in Ann Arbor, and I realized something, and I realized that, wow, my first semester was really bad. And, coming out of high school, you think to yourself, hey, I got this. It's easy. I got my competition. I can destroy my competition. And boy, was I humbled. And that first semester really rocked me. And I realized, geez, and I'm not even sure if this is for me. I did finish my degree, however, but that first semester I was so devastated. I didn't come out of my dorm room. And one of my buddies suggested reading a couple books. One of them was Rich Dad, Poor Dad, and I love that book. Fantastic. And ever since then, I just dove into real estate. And it was amazing because I thought to myself, wow, I can live a life that I want to on my own terms, but also have the money that I want. What a novel and new concept that was to me. And here I thought after I graduated, I was just going to go, work for a big firm and, be a desk monkey all day. And I thought to myself, I'm not going to do that. Not interested. So I started to seek mentors in the real estate world. And it was in my sophomore year where I found a couple properties, hung around a few folks who at that time I thought were my mentors, which didn't end up being my mentors. I actually ended up getting screwed by them in inner city Detroit, but it was a great learning lesson, so I'll share that in a second. But I got into one flip and one rental in inner city Detroit, and I had to renovate them myself. And, once you meet me, you'll kind of laugh because I'm 5'5" and 120 pounds. I mean, I look at a sledgehammer. I'm like, I know you're a sledgehammer. I'm not about, there's no chance. There's no chance I'm going to pick you up and do anything with you. So
sweet.
It was a very interesting time for me. I didn't understand the game, but I wanted to learn so badly that I was consuming information at lightning speed, and I got into a state of overwhelm. And I was in these projects. I was in way over my head. I called on my mentors at that time, and nobody was picking up the phone. And all I remember is one thing from that experience. I got a call. It was late in the evening. I got a call from my contractor, and he said, you know what? I've left a shop vac for you at one of your properties in Detroit. I need you to go. And I'm like, man, you're my contractor. You should be helping me out on this. And he said, I have kids and whatever. I got a jet. And I said, got it. No problem. I understand. Ended up not being very helpful contractor, to tell you the truth. But I get this message. I finished my classes in Ann Arbor. It's about 7:30, 8 o'clock now. It starts to snow in Ann Arbor, and I get to Detroit, and it's a full-on blizzard. Mind you, I'm driving a 1994 Honda Civic DX. It's a red, and it has the tires are balding. I'm swerving on the road, getting into Detroit, and it's a blizzard by the time I get in. I open the front door, and I hear running water. And I had a very, oh crap moment. Yeah. And it's the feeling that you feel this in the pit of your stomach. You're like, oh my gosh, something is wrong, and I know it's wrong. And you go to the basement. Well, I heard the running water. I run to the basement. I'm like, crap. I'm neck deep in water. My contractor's left. It's 9:30 at night, and I'm 5'5", 120 pounds in inner city Detroit, and I have nowhere to turn to, nobody to turn to. And I thought to myself, I'm screwed. I very quickly realized that there's one thing that's been consistent in my life. Even when I was a kid, my father used to say, you know what? Don't give up. Keep going. Keep going. Keep giving it a shot. And you might fail, but it doesn't matter. You're going to keep going, and you're going to try, and you're going to push until you get it done. So that's what I've known. And even at Michigan, it's a very highly competitive engineering program. My competition was stiff, and I had to continue to push and continue to get that edge. So I did what came to me naturally, and I sought the help. And in the middle of the night, at this point, it was probably 10:30, 11 o'clock, so not necessarily in the middle of the night, but very late into the evening, I started knocking on doors in inner city Detroit, praying for two things. One, for help, and two, not to get shot. I went all the way down the street and all the way back, finally found a neighbor, and he and I toiled until 1:30, 2 o'clock at night. The water level wasn't going down, and then a little bit of comic relief in the story, we forgot to check where the source of the leak was. And I thought to myself, this is just, I know, it was just a disaster. I'm not doing anything. I sent my buddy home, a very kind neighbor home, who had mercy on my soul for the few hours that he was helping me. I'm like, hey man, there's nothing we can do right now. Yep. And then to add insult to injury, I fell asleep. I went to the second story, no bed, no mattress, no bed sheets, nothing like that. The heat wasn't working, fell asleep in the corner of the second story house, woke up the next morning and went to class. I hate to admit it, but it was the most vulnerable that I had ever been, and I cried myself to sleep that night, one, knowing that nobody could help me in the situation, and two, slightly excited, somehow I felt excited, that this was the lowest that I could get, and I could only go up from here. And that's where my education started. It's tough.
Yeah, so this was like kind of the first deal? This was one of the first, right?
This was one of my first deals. I was 19 at the time. I had two projects, and I was screwing them up, and I had nobody to turn to. So these are my first two in inner city Detroit.
Well, that's impressive that you stuck through after that. I mean, I look back at mine, and the first 5 or 6 deals went off without a hitch. Things went well, and no broken pipes, no frozen pipes, no break-ins, no contractors. For the most part, I had a couple contractors sort of that need a little more managing than I would have hoped. But, geez, glad you made it through.
I know. Hey, me too.
Sweet. So this was what, 2003, 2004, Abhi?
Yep, this was 2003, 2004.
Okay, so the market was hot at that time and getting hotter.
Yeah, it was right before the crash, and here I am failing where everybody else was making money. I'm like, what am I doing wrong?
At the age of 19.
Yep.
All right, let's fast forward a little bit. And, obviously you didn't keep on doing deals like that, or we wouldn't be here today in Atlanta. So let's talk about what the business looks like today.
Business looks like today. I run a company called Stone & Crown in Atlanta. All we do in Atlanta right now is new construction. And this is July 2016. So Atlanta's hot for the right type of inventory in new construction. There's a lot of renovation that's going on in the city as well. Even if you fly in, you'll see all the cranes all the way from downtown, midtown to Buckhead. There are a lot of in-town communities in East Atlanta, especially Inman Park, Grant Park, Ormwood, Kirkwood. All these places are really, really hot with activity right now. And that's what's driving some of our decisions in purchasing the right property at the right prices and finding the right property at the right prices as well. I'm sure we'll get into that. Right now in Atlanta, we do anywhere between 35 and 40 flips a year, so we're still pretty small, but we know that we don't know everything, and we are always looking for the right type of projects. And we're in Atlanta. We've expanded to Charlotte, and we're taking a look at opportunities as well in St. Louis. We have about 10 projects in Charlotte, and we haven't purchased anything in St. Louis yet, but we're looking aggressively.
Nice. So you landed here in Atlanta. Was that a decision based on selecting this market and you figured out trends and went there specifically, or did you have life take you there and then say, okay, great, now let's figure out real estate?
Yes, it was the latter. So after my 4-year stint in Ann Arbor and failures in the armpit of the U.S. at the time, now it's making a comeback. Woo, Detroit! I love Detroit. It's a nice blue collar city. After Ann Arbor, I moved to Nebraska, then to St. Louis, and then eventually found myself in Atlanta in 2007. I was working with one of my mentors at the time who was investing in real estate then too, and it's been a good constant common denominator in my life, investing in real estate. And I thought to myself, Atlanta's a big city. I think I can do big things. So it was in 2007, I packed my bags from Missouri, moved here, and life just kind of took me. You know, I was in flow and decided, you know what, I'm ready for a change and I'm ready to do things. So it was fun.
Okay, so why is Atlanta hot? Do you have any idea as far as what are the driving market forces in a city like Atlanta, and what other people in other cities might be able to take a look at? Are there certain trends or things going on that drive growth and make Atlanta a better spot than other markets, and things that other people in other cities might be able to take a look at and determine whether they are in a hot or cold market?
Sure, absolutely. I think one of the biggest things, obviously, is job growth. Atlanta is on fire for that, and Georgia, the state of Georgia, not only Atlanta, is becoming the new Hollywood. It really is. There's so many films that are filmed here I feel like it's almost every other day. It is insane to me how many actors, actresses, studios, these types of industries, these types of folks are moving to Georgia. Who is it? Tyler Perry has studios that are being built in Fort McPherson. So for those of you that are interested in investing in Atlanta, take a look at the Fort McPherson area and all the like small little surrounding communities around it, because that area is going to be revitalized very, very soon. And of course, Georgia State just purchased the old stadium, the baseball stadium, which is now moving to another location, and that is changing as well. So for those of you that are not necessarily familiar with Atlanta, take a look at that community called Summer Hill and Chosewood Park, kind of in between Grant Park and the stadium. A lot of that will be renovated, and we're buying at really good prices in that specific area. So, you know, for me, I'm looking at what types of industries are being brought to the city, why they're coming here. Like Porsche's here, they have their new headquarters in just a little southwest of Atlanta, and it's sensational. I think job growth is one of the more important driving factors of any indicator that you want to take a look at, especially if you're considering a market. And then you have your local indicators as well. Obviously, school districts, education. What role does that play in an area that is already hot and potentially cooling, or an area that's up and coming? I'll say about 2 years ago, Kirkwood is a nice little neighborhood in Atlanta that wasn't as hot. So we purchased some lots in Kirkwood anywhere between $65,000 and $75,000. One of those lots we eventually built out. We spent about $220,000 in the new construction build and then resold it for $435,000. So it's a very sizable profit margin there. But that's only because we bought in at the right price point. We understood what was going on with the school district. My business partner, Walt Higgins, was the president of his Parent-Teacher Association at Centennial Academy for about 2 years. And so if you really want to get an understanding of what's going on with the schools and even what's happening within the neighborhood on a microeconomic level, school systems, getting in touch with those guys and gals there. If you have kids, just walk around and shake some hands. I mean, that's one of the biggest things that you can do as well to find out exactly what's driving each city and the market that you're in. The more people you talk to, it's only going to make your understanding of the market that much clearer.
I have two pieces that I want to talk about first. So I don't want to forget about the Kirkwood deal. I want to dig into some of the dynamics, hold times, et cetera, on that. But first, is there something that the state of Georgia is doing at the government level that other states are not doing to attract jobs like Porsche and, the Hollywood studios? Are there things that the government does that other states just not doing that
Sure,
creates this environment?
Absolutely. I think what Georgia is doing very creatively is offering tax incentives for Hollywood to come here. And it's been such an influx. I think over the next, 5 to 7 years, the city of Atlanta will grow by an additional 2.5 million people. And right now, between downtown, midtown, and Buckhead, there are an additional 22 high-rises that are planned, that are coming. You can see it. It's insane. And Atlanta is strategically located where I can take a flight from here to Miami for $29 each way on Frontier, and it's not that big of a deal. It's an hour and a half, an hour and 15 minutes, hour and a half flight. The same thing from here to New York, 2 hours max. From here to Detroit, hour and 15 minute, hour and 30 minute flight. From here to Chicago, hour and 30 minute flight. So Atlanta has, I feel like, the perfect storm between the job growth, the strategic location of the city, and that is becoming now more of an international city melting pot for folks to say, hey, you know what? We don't necessarily want the cold Chicago weather. It's less expensive than Chicago, New York, San Francisco, and a whole lot of the Californian cities. So why don't we check it out? And you get the benefits of the Southern hospitality, which is amazing here. I think the state of Georgia is doing that really well. I think for the Hollywood piece, at least, offering the tax incentives, for the studios to shoot here, and it's doing really well.
Great. So the Kirkwood deal, I believe it was $65,000 for the lot, a $225,000 build. And how many square feet is that house when it was done, Abhi?
Yep. So just to correct the numbers, $75,000 acquisition, $220,000 on the build, a 2,400 square foot home, reselling for $435,000.
And how early did you buy that lot?
So we purchased that in late 2013. We purchased that in late 2013. We knew that Kirkwood was going to be on the rise. And it's interesting because right now you can't even find a new construction project for less than $150,000, $180,000, that range. So it was a very interesting time to buy. Nobody was buying them, but now everybody wants to buy in Kirkwood. It's pretty awesome.
And how long was it that you held that lot until the property was built and sold and settled? Are we talking, 8, 9 months, 2 years, 3 years?
Yeah, so we held on to that. So 2013, it was about it was about a 2.5 year time frame. It was a 2.5 year time frame. The project didn't take that long because it was an intentional hold in the beginning. And then we held it initially for, I think, about 6 or 7 months. I'll get back to you on the timeline on that, but I think it was about 6 to 7, 8 months that we held on to it. And then we started designing the house. Initially, we had it designed at about 1,800, 1,900 square feet, just a 1-floor, 3-bedroom, 2-bathroom home. And then we saw that sales were picking up in Kirkwood, and we didn't realize that we were probably not building the right product, because we could have capitalized a lot more. If instead of a 1-story 3-2, we could have gone a 2-story 4-3, which is what we eventually did. So once we already had the plans back from the city approving us to build the 1-story 3-bedroom 2-bathroom house, we decided, you know what, we're going to X that. We're going to can that idea. Let's go back to the city, send in revised drawings and revised engineering and revised plans for a 2-story, 2,400 square foot home at a 4-bedroom, 3-bathroom, a 3.5-bathroom configuration. And what's interesting is you have to be careful because you have to know your numbers and you have to be really confident in those numbers and you have to engage your team at the beginning. And that's exactly what we did. So the relay race that we run from the very beginning is the acquisition piece. Let's bring in our surveyor. Let's figure out what we can put on the lot. Let's make sure that the real estate agents that we will use to sell the property is engaged from the very beginning. So we know finishing, the flow of the house, everything that we need to make this house a competitive house in the marketplace to sell before it goes on market, or at least give it the best chance to do that. Worst case, you know what? It'll sell within 30 days. Fine. But we want to give that community an awesome looking house, and we engage people at the right times to be able to make those decisions to say, hey, you know what? Yes, we're confident in taking it from a 3-bedroom, 2-bathroom, changing the plan, spending the additional money, going to a 2-floor, 4-3 configuration.
What was the extension on the timeline? How much time did each of those submissions cost? So in order to, apply, send in the plans, have the engineering, all that sent in, is that a 3-month additional timeline?
That is, yes, that's accurate. At that time, Atlanta wasn't getting super busy. So that took about 2 to 3 months in additional time. Right now, the city of Atlanta, you're looking at anywhere between 3 to 6 months. depending on who your permit reviewer is and just depending on who you know. That's just because Atlanta's so busy. It's on fire. It's crazy. And that's why we're looking at different markets like Charlotte and St. Louis because, quite frankly, I don't like having my money sit in escrow and just accumulating interest for 4 months while we're waiting on the city to make a decision. So we have to be smart about that and diversify our efforts elsewhere.
Okay, so if we could, why don't we just pull this deal apart and keep digging into it since we've kind of used this as our example. How did you find this deal?
So a lot of what I talk about, even when I speak around the country, is you have to put yourself in a position where you're attracting deals. And this one came to me from LinkedIn. So for those of you that are listening, if you do nothing else, build out a awesome looking LinkedIn, Twitter, and Facebook profile. Do it because you want to make sure if you have like a www.yourname.com, get that too and build that out so it looks super nice because when people Google you, like Dan, I'm sure you saw what I was doing online. You're like, hey, cool. Abhi seems like a pretty good candidate to have on the show. He can offer some amazing value. I'm sure you Googled me. And
absolutely.
One of the, right? So you have to Google people, and I want you to see all the stuff that I'm doing, and I'm presenting it in such a way that is like, hey, cool. Abhi's open. He wants to do good business. He wants to work on projects with other people. And boom, LinkedIn, Twitter, Facebook, www.yournamehere.com. That's how I got it. In fact, more specifically, I got it from LinkedIn. There was somebody there was a wholesaler that found me on LinkedIn, sent me a message, said, hey, I'm looking at this property in East Atlanta in Kirkwood. And you know what? You seem like a guy that's doing some deals. Even if you're not doing any deals, this is amazing how it works. Just write a professional summary, get yourself out there, and people will start coming to you. But remember, you also have to play your part and do your outreach to others and shake as many hands as possible. And so to answer your question in a very long form, I got that deal off of LinkedIn.
Okay, and what was the capital structure? So how did we bring in partnership monies, if any? Did we use bank financing to do the construction, all private financing? I mean, can we just talk about the details of that piece of it?
Sure. Because this was such a creative deal, normally lenders won't let you just buy and hold and sit on property for a year and not see any active movement, right? Because their capital is tied up on a property that is worth less than what they've slated the capital in escrow for, right? Because our acquisition was $75,000 on this, but we had raised far above and beyond that. So we had put in 20% of the total loan size. So let me grab a calculator here. So 0.2, what is that? 20% times 75 plus 220. So we put in about $60,000 of our own money, and then we had a loan for the rest. And this was from a hard money lender that we had a relationship with previously. And he said, you know what? It's not a big deal. Why don't we go ahead and sit on it for a little while? If you need the 220 if you need the 220 in construction capital, let me know, and let's have a good dialogue about this on a monthly basis and see where this property is going to be in a year or two from now. So we were lucky in that. Not a lot of lenders will do that. A lot of lenders want to see draw request, draw request, draw request, and they want to see a property gone so they can then turn their money and use it for another deal. So to answer your question, $60,000 in deposit, in down payments, and then the rest was financed from a flexible hard money lender.
Did you have to pay interest on the entire full amount, even though it had not funded yet, or was this hard money lender very reasonable with you and allowed you to calculate interest once the draws were made?
Great question, and it was the latter. So a lot of hard money lenders right now in Atlanta, they will charge interest on the entire amount, on the entire loan size. This lender specifically said, you know what, that doesn't make any sense because you're not using the money. Why would I charge you interest on money you're not using? So we're just going to go ahead and stagger it. So obviously we're paying interest on the purchase, on the amount that we used to purchase the property. And as we drew down on our construction capital that was reserved in escrow, that was the only amount that we paid interest on.
Got it. And the 60,000 down, was that a few partners put together their money? Did you bring in one sole private lender and then pay him interest, or was it just a downstroke from your account?
That was half of that was a downstroke from our account. The balance was from a private investor, and that private investor got a promissory note and a deed to secure debt secured in a second lien against the project, against that particular property.
And do you do like a single LLC for every build, or is this
every single one
LLC? Okay, good.
Yep, every single one. Got to limit that liability. Yep.
Compartmentalize. That makes sense. So is this the cookie cutter financing structure for the deals going forward, or have you now constructed a better way of putting together the financing?
Yeah, we're always looking at the marketplace and identifying what trends can help us the most. Crowd finance or crowdfunding in the real estate space has gotten really popular, and that's a very, very unique way to structure deals at interest rates that are lower than most lenders. So we're starting to take a look at that. We also use PPMs, private placement memorandums, to raise capital for larger projects which involve a larger number of investors. So that's something that we're starting to utilize as well. And on the one-off where it's a quick renovation or quick new construction, very similar to the structure that we just talked about, we have a few of those projects as well. So we're starting to open up the ways that we are raising capital, and we're always making sure that we're in compliance. So, if you're even near the boundary of selling a quote security, make sure that you have a good securities attorney that is reviewing your deals. And that is massively important, because my structure might not be the same structure that you would want to use on your deals. And it's interesting to me because there's so much information out there, whether it's on a forum or some online article or a podcast that will share with you what you should be doing. But you got to make sure that you don't fall out of compliance with the rules and regulations with your specific state, and then of course with the SEC. Otherwise, you could get into big trouble. So that's just my little cautionary thing. My little caution to you guys.
Yeah, ditto. So other than the LinkedIn strategy, are there any other great little tactics you have for attracting more deals for your business?
Absolutely. I love providing value. I'm probably one of the few people that do very personalized video responses to real estate questions that I get, whether it's online, on Twitter, LinkedIn, just email, and people don't expect that. Even my sellers who I submit offers to don't expect a video with the offer. And that's really
nice.
Cool. That's a really cool, right? That's a really cool tactic because, as you can tell, my personality is pretty crazy. I'm off the wall all the time. I'm like a dog. I can pay attention to one thing, then I'll shift my super ADD. And so it's funny because the responses that I get from people that are listening to the videos and listening to my responses about the questions they have about real estate, they're like, of course I'm going to send you deals the next time I run across something that's good, whether it's Atlanta, Charlotte, and even a market that I'm not in, because you are the one, you care. You care about who I am, and you went out of your way to respond by creating a good video that is 5 to 7 minutes long. You offered good value, your contact information, and open arms to me. And nobody's doing that right now. Nobody. So that is such a huge win. And then obviously go to Vistaprint, get business cards. You can even get free business cards on Vistaprint.com. And I'm not paid by Vistaprint to endorse them. I'm just you pick your businesscardcreator.com here, fine. But create good-looking business cards and start handing them out and make phone calls, shaking hands, and follow up. It's not good enough to go to a networking event and market yourself and that's it, and expect people to get in touch with you. They don't know you. They don't care about you. You have to make them care about you, and the only way to do that is to follow up, have meetings, have a cup of coffee, and go for it. I think lunch meeting is a little overrated unless it's a very important meeting, then lunch is fine. But generally for me, 15 minutes, coffee, maybe 30 minutes at the max. And that's how you start to build a relationship, and then think about how to monetize it later, and always ask the question, what can I do for you? Instead of, hey, what can you do for me? Because the more that you ask the question, what can I do for you? Man, I can only tell you, I cannot tell you how impactful that is. Because we live in a microwave society and we live in a me only society. And if you flip the tables on that, incredible.
Interesting. So do you not do, the standard marketing letters and things of that nature? Is that not a part of your business?
That no longer is a part of my business. That no longer is. I spend my time with wholesalers and training up wholesalers and developing wholesalers to have an investor's mindset and to have a long-term investment mindset. And the more wholesalers that I connect with, people think that wholesalers are kind of like the scum of the earth. Like, oh, I have to pay this wholesaler, or how can I, knock down the wholesaler's fee from $5,000 to like, $500. Well, if you're a wholesaler and my numbers are working, I don't give a crap if you're making $5,000 on a property, $2,500 or $50,000. I don't care. In fact, I'm going to encourage you to go do more deals. I'm going to share with you my strategies on how to go do more deals, because you know what? When the market downturn is here, then everybody can capitalize, and you as a wholesaler have been fed and you've been eating this entire time. And now, guess what? Who's your first call? Me, because we're going to go crush it together, baby. Like that's nice. How it is. So I'm spending my time with people that have circles of influence, and wholesalers generally have large circles of influence. They have the buyers list, they have the sellers, they have other wholesalers that they're connected to. And if I can get connected to other wholesalers or other buyers, there's a JV scenario, and guess what? Boom, that's money in the pocket for the wholesaler that introduced me to my new JV partner who's an investor. So it's all about the circles of influence. The more that you can tap into those, the more that you can do, and the more dramatic impact that you can have on somebody's financial bottom line. And if you can help make somebody more money, that's it. You're going to have more opportunity coming to you that you can even handle. You'll be overwhelmed.
So you have a pretty solid network built up here in Atlanta where you're operating, and you did this through this method that you're talking about. I mean, what volume? Say that the last 3 deals, were they in the last month? Are they coming through about 1 deal per month? I mean, what kind of a deal volume or deal flow are you seeing through this method?
So Atlanta's a very interesting bird. There's a lot of opportunity here, which means that you're going to have a lot of just your new investors bidding on property. And the moment that I see a lot of new investors bidding on property, I'm generally going to start to turn to the harder deal, more development deals, more buy and hold deals, more larger developments. And if there is a tear down opportunity, if I can find a lot, subdivide it, tear the damn thing down, and then build up new, excuse my French on that, by the way.
You're good.
Then those are the deals that I'm attracted to. So when I was looking at doing a lot of the renovation type deals, and I was doing a good amount of volume, anywhere between 2, 3, 4 a month on that. Now I'm looking for a higher quality because we have better capital and we have access to more capital. I'm interested in development deals. So we're in a contract on a 92-unit townhome build-to-rent community. We're also under contract on 2 25-unit townhome communities. And we're just putting those types of deals together. We're also going to smaller towns outside of Atlanta, still in the state of Georgia, where we're finding larger development opportunities to take a look at. And while the single-family world kind of settles down for a little while, then we'll start to when it starts to settle, we'll start to then dig our claws back into the single-family space. So from a deal volume standpoint, I'm not sure if I can answer that because we're not necessarily only buying single-family homes. We are taking a look at larger development opportunities. I guess on a yearly, then we're probably taking down anywhere between 4 and 5 larger development opportunities, and that would consist of 24, 50 plus probably 140, 150 units then on a year.
Okay. Yeah, I mean, it sounds like it would make more sense. I'm not at that point in my business, but to buy a parcel and then get the approvals and build out 92 units all at once, you definitely get the economy of scale. Contractors are going to be a different breed altogether that's going to handle a job, a build out like that might take, what is that, like a 2 or 3 years project until it's rented up?
Yep, about 2 to 3 years. I know the the 224 units, that's going to be about 2.5 years to do because we have about a year and 2 months in permitting on that. And then the larger one obviously would probably take a little bit more time. But that's really, when the market is hot, those are the types of deals that we deviate, that will naturally go toward. When the market is cool, then guess what? It's easier to buy single family homes that sellers they just want to offload because nobody's buying, and then they get fearful and they're willing to negotiate. They're a lot more flexible on price and they're willing to negotiate, which is where Atlanta is not right now. Atlanta's super hot, so when I'm running my formulas in a super hot market, I'm going to go 60% of fair market value minus the cost of repairs. Notice I did not say ARV, I said fair market value, because most of the time your after repair value is what people use from an appraisal, and you're not going to sell 100% at what the appraisal tells you for a property. It's just something to take a look at. And a cold market will alter those numbers a little bit. You know, we can go 70% or 72% of fair market value minus the cost of repairs for single family homes, because we know that we're in a colder cycle and we'll be able to extend out a little bit more knowing that the market is going up. And that's where we take a look at the local market dynamics, what's going on macroeconomically, microeconomically, and really digging into school systems, speaking with the agents, meeting with agents. And that's what we did in St. Louis. You know, we took 3 days and we had back-to-back meetings with builders, agents, contractors, bankers to really get a good understanding of it. And now we know exactly what to do. Did I answer your question? I think I went on a tangent.
It's great. It's a great place to go. So you mentioned the lower discount of the purchase in this hot market to account for what? The softening and lowering of potentially of prices, say 8 months out, if that's your whole time? Is that what the reasoning is for lowering the discount right now in a hot market?
Yes, exactly. That and the artificial increase of prices. Does that make sense? Because I want to make sure that in the event of a turn down, the likelihood of values declining faster if they've been inflated at a much higher rate is higher. So I want to make sure that I'm always buying a little bit lower than what most people are buying in a hot market, because I'm a little wary of what's going on. Now, does that mean that I'm not going to get access or I'm not going to buy as many opportunities as I would like? Yes, and I'm okay with that, because in a hot market, I have no problem sitting on the sideline waiting for everybody else, waiting for all the lemmings to die, because then I can come back in when the new investors, and I'm praying that this doesn't happen with the new investors, but unfortunately it does, and either take over the projects or do some sort of JV or wait until sellers start to get paranoid and fearful that the market is going to crash. Then I'm able to go back in and say, hey, you know what? Let's start to negotiate harder on these deals, and then we can go back up to the 70% or 68% of fair market value number, that figure.
And if we're already in the soft market, we've already, hypothetically I'm speaking, we've already seen a 5 or a 10% lowering of the artificially inflated values. So to go at 70 or even 72%, it's kind of the logic is it really can't go down much more than this, right? Is that what the thinking is behind the higher discount in the cold market?
Correct. Yep, you got it. And the way that I look at that, the way that I'm looking at a subject property in the single family space is single family house, go out a quarter mile. I want to know all the activity within the last 30, 60, 90 days of the completed listings and, or the sold listings. I'm sorry, I meant to say sold. Completed is eBay. Sold listings, why did they sell, flow of the house, finish level, and I also want to see active listings and what is currently on the market. And that is a very tight box too. I'm not going to go, if it's a quarter mile, I will not cross any streams, railroad tracks, any major intersections. So I prefer comps on the same street or, 1 or 2 streets over. That's fine. I'm not going to go I'm not going to go further than my quarter mile and that little super tight box that I've created for myself. And to your point, exactly. Once the market starts to decline a little bit, I want to see the lows stabilize and then go from there. Then I'll take a look at 70, 71, 72% of fair market value there, because then I know that the market is stabilized at a specific floor. The floor has been tested over a quarter, and then I'll start my buying activity.
What would be the ideal sale price once completed retail of that project that you would pay, let's say 72% of?
Ideally, I would say anywhere between 90 and 92% of fair market value.
But I
the
guess
worst case.
price point. Are we talking $250,000 houses or $78,000 houses?
So I would say the former. I would say the $200,000 to $250,000 houses. In a market that's turning downward, the value I've seen that the value of homes that are selling between 50 and like 125, 130,000, they really don't fluctuate much. They might fluctuate, 2 or 3 percentage points, but from what I've seen, they're not going to fluctuate. They're not going to go down, 15, 20, $30,000 or, I'm not going to see that. It's very similar to, if you have somebody that's super overweight, it's easier for them to lose fat. But if you have somebody like me that has no fat, it's harder to lose fat. Does that make sense? Bad analogy.
Yeah, that makes sense. I like those properties too myself at the $200,000 or more, and our buying structure. I'm impressed that you have it divided for the market. So ours is slightly different from that, not as well defined. I think I'm going to reconsider that, and I'm not going to share my erroneous way of doing that right now. But I like the $200,000 plus price points. You can spend some money on the rehab and get into design, and there's enough profit at those discounts to, have a $30,000 profit, $35,000, $40,000 profit at the end of the day after the hard money lenders and the commissions and every other expense that comes out of the deal is done. One other clarification. So you said I pull comps settled in 30, 60, 90 days. Are they 3 separate runs and 3 separate filters? So I pull last 30 days sold, last 60 days sold, last 90 days sold. Is that correct?
Yes, that's correct. Last 30 days sold, last 60 days sold, last 90 days sold. Because what you're looking for, and ideally you can find somebody on, Fiverr.com or hire a college intern to do this, but ideally what you want to do is create an Excel spreadsheet or some type of visual where you can plot the 90-day, 60-day, 30-day and see where the prices are trending. And then get a very good understanding of, okay, where are the outliers? Why are they outliers? And those outliers will really tell you the flow of the house, the finish level of the house, and the bedroom, bathroom configuration, and the square footage configuration. That's what I want to know too. I want to know 30, 60, 90 days of activity, and for any outliers, why are they outliers? It doesn't make any sense for them to be outliers. Are they in a different school district? What happened there? Because every house has a story, and every sale has a story. And I also don't want to see wholesalers coming to me and saying, well, I'm looking at this comp a mile away, it's across the highway, but we're using that as a comp because it's the only comp available. Well, then sorry, that subject property is probably going to be a buy, hold, and rent for a little bit of time. It's not prime for a flip at all. And to your point, I think flips make sense if you're north of the $200,000 price point. Anything between, the $75,000 and $150,000 price point, just like a lot of the funds are doing, they will buy and they will hold for a certain period of time. Then once the sales start to pick up, obviously, then you can renovate and then resell for a profit. So just something else to keep in mind.
This is great. This is like high-level market analyzation techniques. I'm loving it, and I'm hoping the listeners are loving it as well. So how many in the sample altogether? You pull comps, quarter mile, how many houses have to show up? Because we have a lot of listeners in different markets where the densities are going to be drastically greater or drastically less. And the number in the sample, I think, is important for a lot of people to kind of translate whether or not the quarter mile is pertinent or whether to go out 0.3, 0.4, 0.5, or even down to 0.1 in some spots in Philadelphia. So how many would you need to see comps sold and settled in each of these samples in order to say, okay, I'm getting a good picture here?
That's a good question. And I think, like you said, it's going to be market dependent. And I hate leaving it at that. And I'm not going to, because I listen to enough podcasts and they always say it's market dependent and move on to the next topic. So generally, it's just kind of bull. It drives me nuts. Like, hey, I'm going to give you part of the information, then I'm going to talk a whole lot about nothing for 2 minutes. And then we're moving on to the next topic. So essentially deflecting, which is what I hate doing. But in Atlanta, I want to see anywhere between 5 and 6 solid comps. I want to know what's selling, why it's selling. Oh, and the other factor, days on market. Okay? If I'm starting to see longer days on market, guess what that means? That means that there are too many choices. Well, one reason is there are too many choices for buyers to choose from. There's oversupply in the market. Second reason is that people and this can kind of shaft you too, unfortunately, because if you're not doing a good renovation, now all of a sudden you're increasing the days on market for that particular neighborhood, and you're not putting the right product on the market. And you got to be careful of that. You have to be careful of that. And so take a look at your competition, drive the area, and see exactly what's selling and why it's selling and why it's not selling. But if I'm looking at my 30, 60, 90 days, I want to see as many as possible, but at the very least, I want to see 5. Give me 5 good solid comps, and then I'll be convinced in a good selling area. If you are setting your own comps because you're doing all the work, then hey, keep going, because then you know exactly what's working for the area, and the market has to, and by market I guess I mean other investors have to catch up to the trend that you're setting in your own market. I don't know. Did I answer your question? I think I answered your question.
It did. It was perfect.
Okay.
So like right now I'm in Chicago market. I'm in Philadelphia market. I'm recording this one from a trip in Philadelphia here, checking on things, was in for a wedding. I am in the Tampa Bay market, and we're going into the Atlanta market. So depending on which neighborhood, which price point I happen to be making offer decisions on, I might see, let's say, I'd like to see 25 to 40, and that would include active and sold. And if I see a neighborhood myself where it's about a 50-50 split or less, meaning half of the pool in, say, the quarter-mile radius, half of that pool would be active or less, and half of that pool would be settled or more, would be ideal for me. I like to see markets with less than 50-50 active. So if I see 75% of the properties are active in that area, that gives me a quick indication that I have a little bit of a soft market. That's just brief, kind of quick, easy math. There's a lot of other things I get into depth with the days on market and things of that nature. But just to take a quick temperature of the small micro market, that's kind of a good basis.
That's brilliant. And I feel this is what people don't talk about. Right? Because it drives me, this is the due diligence that you have to do. You have to understand your market. And if you don't have access to the MLS to pull this data, don't use Zillow, because Zillow can be wrong sometimes. Don't use Redfin or anything like that. Get in touch with an agent. Make sure that they know that you're serious, and they'll pull comps for you. They're not going to ask you for proof of funds to pull comps. I mean, that's just not the way they work. But they have to know that you're serious. And the moment that you tell them, I'm looking for this, I need these comps, and I want to know how many on average, if out of, say, like you said, I mean, if out of a quarter-mile radius you're finding 10 properties, out of those 10, 7 are active and 3 have sold, you have to dig into that a little bit more to figure out, is this really a soft market? Then you probably shouldn't be doing a rehab if the market is soft, right? Because now you're shafting yourself. This is your first time. You have a lender that's trusting you, and your days on market are going to be 90 days on market because you didn't do your research properly, you didn't bring in your agent on the front end, your interior designer sucks, and all of a sudden your contractor's failing. You got to make sure you do your homework on the deal, on the market, and on the people that you bring on your team. I couldn't stress that enough, because if you don't have a good real estate agent, then how are you going to know? You're just not going to know. You're not going to know your market dynamics, just as you eloquently put it. You have to know that stuff. Otherwise, try again next year. It's not going to work.
Yeah, absolutely. Great point. I'm going to switch gears here. I'm going to ask for a couple of the questions I like to ask every guest. So, Abhi, who is the most successful real estate investor or developer that you know, and why? You may know this person publicly or, personally, as in like not know them personally. They could be dead or alive. Is somebody you look up to, but the important aspect of the question is the why you believe they're successful.
Boy, that's a good question. I'm debating between one of my mentors in Ann Arbor. So here's the debate. The debate is you have on the one side the easy answer, and popular or unpopular, depending on how you feel about politics right now, is Trump. Right? He's a great he's a great businessman. He's done well for himself. He's licensed his name all across the world. But I still feel that he does good deals. On the other hand, I have one of my mentors in Texas. He's successful in his own right. His name is Godwin Thomas. He's from Australia. And shout out to him, because he did a lot of lease purchase deals. He does his own building deals. He does his own renovation deals. And you know what? He doesn't have the stress. He does the deals that he likes to do. He impacts the lives of people, and above all, he has fun doing it. It's not about the money for him. It's about the game, and it's the fact that he has fun. If real estate isn't your thing and you're just doing it for the money, then stop it. Because that's very frustrating and very annoying. I love investing in real estate and building businesses because I cannot imagine myself doing anything else. I have so much fun. I can run 16 hours a day and I don't feel like I'm breaking a sweat. There's some days that are super, super stressful and there are other days that are not, but you know what? I enjoy it. Every single moment of it. And if you like pottery and playing with clay, then that should be your thing. If you like, selling Power Ranger collectibles on eBay, then do that because that's what's awesome for you. If you want to bring back the Beanie Babies from, I don't know when that era was, then great. If you want to blog about that, then go for it. But if the biggest thing that he has taught me is have fun in doing what you're doing, because that's what's going to get you ahead of the game, and that's how you become the best in what you do, and you make money doing what you love doing best. And the focus should never be on money. Okay, it's not like you're in school, you don't focus on getting an A. Well, you shouldn't be focused on the exam and getting an A. You should be focused on learning the material and really understanding the breadth of the material, because guess what? Now you know how to apply the skills that you've learned on the hard exam questions, which then lead to the A. You don't study for the A. You study the material so you get the A. You don't just expect the result without the hard drudgery kind of action that you have to take to learn the stuff in the beginning. You got to focus on the process and the result will be there.
Nice. Well said. You mentioned Rich Dad, Poor Dad. Do you have maybe 2 or 3 other life-changing books you'd like to share?
Yeah, I think Think and Grow Rich is a classic. That's such a good book. The Acres of Diamonds as well just increases, right? It just lets you know that there's so much stuff even in your backyard. And for folks that are listening that are interested in kind of expanding their horizons into real estate, you're like, hey, maybe I should invest in real estate in Chicago, but I live in, the Twin Cities in Minnesota, or I'm in Texas, whatever. Start in your backyard because you have more control over that. And you know what? You don't know what you'll find. Stop searching for zip codes that are far away from you and start and prove the concept where you are right now in a quarter-mile radius, and I guarantee you will find deals. I would say those are the other 2 books. There's so many books on my shelf. I'm sure I could send you a list and you can make it available on the books that I've read in the past that have created an impact for me. So I'd be more than happy to do that.
I like it. Yeah, that'd be cool. I can include that in the show notes as well. This is cool because we started with you at the age of 19. So if you could share the crown jewel of wisdom with your 19-year-old self back when you were knee-deep in water in a freezing house in Detroit, what would that be?
Fail more.
Okay.
It's just fail more. Because when I was going through school, I realized one thing. I realized that I was terrible at academics. I grasped the concept, but I grasped the concept after making mistake after mistake after mistake after mistake after mistake. Thomas Edison, and again, everybody knows this, but very few apply it. Thomas Edison spent how many times figuring out the light bulb before he got it? Like 1,000 times. The difference between us and and the person that we want to be is the amount of failures we've had, but you have to learn from your failures. You have to. I was underwater in properties in Detroit. I had no idea what I was doing, but that was a huge learning lesson, and I kept failing after that. Now, we only got to part of the story, but I kept failing after that for probably a good year, learning the lease option, developing real estate. And, again, 19, 20, 21, I had no idea what I was doing. But it started to form in my mind what is right, what is wrong, what works, what doesn't work, how to have the very intellectual conversation, how to have a conversation with somebody without sounding like an idiot, without sounding greedy, without having this very selfish vibe, but fail. Because there is so much you can learn in failure, but make sure you learn it. You make sure you learn the mistake, because that makes you better. It makes you stronger, and you can jump right up. It doesn't matter. It does. Whether you fail, whether you face rejection, make those 400 phone calls this week. I don't care, because I guarantee you, by the time you finish making 400 phone calls this week, you will be so numb to rejection, it wouldn't even matter. you'd be begging for somebody just to slam the phone in your face and say, hey, awesome, see ya. I love that feeling. So I would say fail often and fail more, but don't make dumb financial decisions. Like, if you're going to fail, then do it and do it. If you are making a financial decision, make sure that you give yourself the adequate due diligence time frame. And if you've done everything that you can do and you've done your best and you still fail, then, fine, learn from that and then grow as a result of that. Don't just fail to fail.
Got it. So if anybody's listening and wants to get more information about you, your company, et cetera, do you have somewhere they can get in contact with you?
Absolutely. So if you Google Abhi Golhar, I think I'm the only person on Google that has that name. So do that. That'd be awesome. Or you can also visit Real Estate Deal Talk. I'm about to put together a podcast, and I'm also renewing a radio show that I do in Atlanta every day from 2 to 3 p.m. So tune into Biz 1190 AM. It's an 1190 AM radio station. Go to realestatedealtalk.com for more details. And if you want to learn more about what we're doing on the investment side, go to summitandcrown.com.
And I'll make sure to include that in the show notes as well. Abhi, this is great. I got pages and pages of notes here. I appreciate you coming and giving us your time here.
Hey, you are very welcome. Thank you for having me. And I love what you're doing for your listeners. It's very, very, very important that folks get a good perspective on stuff without being sold anything. And I appreciate you for keeping that alive. So thank you very much for doing what you're doing.
Thank you for listening. As always, you can check out all the REI Diamond Show episodes at www.reidiamonds.com. You can also make expert guest suggestions, submit deals you have for sale, and sign up for the new episode notification email that comes out on Saturdays. We are currently looking for real estate investment opportunities in the greater Philadelphia region, the Chicagoland region, the Tampa Bay area in Florida, and Atlanta, Georgia. That website again is www.reidiamonds.com. Thanks again for listening. Dan Breslin here. I will catch you next time. And remember, here at the REI Diamond Show, we are dedicated to bringing you the experts, ideas, and strategies for increasing and protecting your net worth.
Thanks for listening to the REI Diamond Interview. To receive the REI Diamonds newsletter and interview monthly, sign up now at www.reidiamonds.com.